What is up, everybody? Happy Friday out there. Welcome to Bitcoin and Markets. My name is Ansel Lindner, and today we have a random show, Bitcoin Hangout. We're going to talk Bitcoin and Geomacro, geopolitics, and macroeconomics. So let's jump right into it. Bitcoinandmarkets.com. That's where all my stuff comes out. Wrote a blog post this morning responding to the American Institute of Economic Research and one of their posts on interest rates and inflation. That went out to paid members first, and then it will go out to the public this weekend sometime. Oh, before I get too deep into this, guys, like, comment, subscribe if you're watching on YouTube or Rumble. Put your comments down below. I will check them towards the end of the show. But okay, so that's bitcoinandmarkets.com. Go there to sign up for the free newsletter or to support the content. I also write for bmpro.substack.com. Have a lot of good stuff. One that I'm really proud of is this one that came out the other day. The evolution of Bitcoin investments. Bitcoin equities are the new altcoins, so check that out. Okay, let's jump into the jobs report. The U.S. jobs report came out this morning, and this is important because all of these other major economies are in recession. Germany's in recession. Japan's in recession. I think China's in recession. Even though we hear things about China, they have these goals of GDP growth of 5% next year, and they think they can do it. And we see all these other statistics about China. They are in a world of hurt. They have goal-seeked data. So Beijing says grow at 5%, and the regional governments go out there and invest in things to make it look like they grow 5%. That's why you get bridges to nowhere. That's why you get all these ghost cities, because they're just building to meet their central Politburo goals. But I believe that China's in recession, Japan, and Germany. So the next three biggest economies besides the United States. And I think the United States is going in that direction. One of the things we've been waiting for to kind of confirm that, of course, is the job market in the United States. With 3% unemployment, it's very hard to say that we're in recession. But let's read what came out this morning. So inside the most ridiculous jobs report in recent history. Record 1.2 million immigrant jobs added in 1 month. Last month, we thought that the January jobs report was the most ridiculous in recent history, but boy, were we wrong, because this one, the Biden Department of Goal-Seeked Propaganda, that's the BLS, published the Friday jobs report. And holy crap, was that something else. Even Goebbels would blush. What happened? Let's take a closer look. On the surface, it was almost another blockbuster jobs report. Certainly one which nobody expected, or rather just one bank out of 76 expected. Starting at the top, the BLS reported that in February, the U.S. unexpectedly added 275,000 jobs, with just one research analyst expecting a higher number. Some context. After last month's record 4 sigma beat, today's print was only 3 sigma higher than estimates. Needless to say, 2 multiple sigma beats in a row used to only happen in the USSR and now in the US, apparently. And you can see this chart, if I can make that bigger. So this was last month's job report, and it was way over the consensus forecast by 4 sigma, 4 standard deviations. And that's a big deal. All right, going back. Thank you. Before we go any further, a quick note on what last month we said was the most ridiculous jobs report in recent history. And they said that again this month. It appears the BLS read our comments and decided to stop. I don't even know what that word is. Blocoing itself. It did that by slashing last month's ridiculous print by over a third and revising what was originally reported as a massive 355,000 jobs, beating consensus. So you can see up here again, 355,000 beat to just 229,000. So coming down here, this is probably 1 sigma. It might be 2 sigma, which is the biggest 1 month negative revision in 2 years. And here is the negative revision. But look at all these negative revisions. I mean, that's a ton. And there are positive revisions, though. Of course, that does not mean that this month's jobs print won't be revised lower. It will be, and not just that month, but every other month until the November election, because that's the only tool left in the Biden admin box. I agree with that to an extent. I mean, they have other things, like, they're talking about think about all of the weapons they were alleging that the previous administration used to remain in power. They're going to use those same things because they are projection through confession, or confession through projection. Pretend the economic and jobs are strong. They have a lot of typos in here, actually. The economy and jobs are strong. Then revise them sharply lower the next month. Something we pointed out first last summer, blah, blah, blah. All right. To be fair, not every aspect of the jobs report was stellar. After all, the BLS had to give some vague credibility. Take the unemployment rate. After flatlining between 3.4 and 3.8% for 2 years, and thus denying expectations of Sam's rule that a recession may have already started, in February, the unemployment rate unexpectedly jumped to 3.9%, the highest since February of 2022. With black unemployment, blah, blah, blah. Don't care about that. All right. And then there were average hourly earnings, which after surging 0.6% month over month in January, since revised to 0.5%. And spooking markets that wage growth is so hot. I mean, this is what a lot of people, Zero Hedge is guilty of this too, using all this hyperbolic language and what I kind of make fun of. Oh, people are going to say, oh, it's a double top in Bitcoin, blah, blah, blah. Yeah, they do things like this. Oh, it's so hot that and then people linearly extrapolate from that, inflation is going to pick back up and all that. The Fed will have no choice but to delay cuts because it was so hot last month. But in February, that number tumbled to 0.1%, the lowest in 2 years. So this is hourly earnings. Let me see if I get that in the middle of the screen. Hourly earnings, you can see this month was the lowest in 2 years. And 0.1% annualized is 1.2%. So that's pretty low for the hourly earnings. Plus, there is some nuance here in the calculation. So for one simple reason, last month's average wage surge had nothing to do with actual wages and everything to do with the BLS estimate for hours worked, which is the denominator in the average wage calculation, which last month tumbled to just 34.1%, 34.1 hours worked per week. So that you can see on the chart, the denominator dropped, so it dropped faster than the numerator. And that's why we had the big hourly earnings increase last month. But this month it has since caught back down. You can see it kind of was revised up a little bit, this bottom point from 34.1 to 34.3. Oh no, 34.2. Let me make that bigger. So now it's 34.2 last month, and it came up to 34.3. And then the numerator also came down. So, this is why we see this big dip in hourly earnings there. 34 hours a week. That's not very much. Okay, let's continue down here. While the above data points were examples of some latent weakness in the latest report, perhaps meant to give it a sheen of veracity, it was everything else in the report that was a problem, starting with the BLS's latest choice of seasonal adjustments after last month's wholesale revision. So they do change these seasonal adjustments every now and then. And, one of my things, my analysis has been, if we got rid of seasonal adjustments, it would be better because you wouldn't be able to do like month over month, wouldn't matter as much, but you would be able to spot annual type things. Like why do most stock market crashes happen at the end of Q3? Why banking crises seem to happen at the end of Q1? Well, it's masked because of seasonal adjustments. But if we didn't have seasonal adjustments in a lot of these numbers, we'd be able to see a more clear picture, in my opinion. But anyway, they at least give that option. But they updated their seasonal adjustments last month wholesale. which have gone from merely laughable to full clown show. As the following comparison between the monthly change in BLS and ADP payroll shows, the trend is clear. The Biden admin numbers are now clearly rising, even as the impartial ADP, so ADP is private, at least partially private, I'm not sure, but it's their BLS is public and ADP is private in this comparison. And ADP, they log employment numbers at the company level. So it's much more granular and is far more accurate. And they show an accelerating slowdown. So green is the government data. I don't know if that's even a best fit line. I would say best fit line for the green data is kind of sideways. But obviously the ADP has been much lower, and it hasn't really been trending lower in the last couple months. December was pretty big, and February here was a jump as well. So I don't necessarily agree with this from Zero Hedge here. I think it is a lower level, though. And if you would take this lower level and extrapolate that, then you would come to different conclusions. Excuse me. Okay. But it's more than just the Biden admin hanging its success on seasonal adjustments. When one digs deeper into the jobs report, all sorts of ugly things emerge, such as the growing unprecedented divergence between the establishment or the payrolls survey and the much more accurate household survey. And we've talked about this. So payrolls is, if I get 2 jobs, I count as 2 payrolls. But the household is how many working people do you have in your house, counting people, and then that is more accurate. While in January, the BLS claimed 275,000 payrolls were added, the household survey found that the number of actually employed workers dropped for the 3rd straight month, this time by 184,000. So, man, this is incredibly important, and I'm going to zoom out so we can see that. Okay, so establishment in green, you can see all these jobs being added. It's always positive, at least 99% of the time. And the household is more accurate, and it has these negative adjustments. And out of the last, looks like 5 months, we've had 3 negative household surveys. I mean, that's a pretty big difference. What would that be? 450,000, between 450 and 500,000 difference in this. And that's significant. Okay. Even in the US with a working population of, I don't know, what is the working population? 120, 150 million, something like that. And so that's a huge deal. All right, let's go back to this. This means the payroll series hits new all-time highs every month since December, when, according to the BLS, the U.S. had its last month of payroll losses. December of 2020. The level of employment has not budged in the past year. Worse, as shown in the chart below, such a gaping divergence has opened between the 2 series in the past 4 years that the number of the employed workers would need to soar 9 million to catch up with what payrolls claims. This is the unemployment situation. So let's take a look at this one. Look at that. So this is the household survey on the bottom, payrolls on top. I mean, that is nasty, guys. Nasty. But there is a reason for this as they get into down here. There's more. Shifting from a quantitative to a qualitative assessment reveals how ugly the composition of new jobs has been. Consider this. The BLS reports that in February of 2024, the U.S. had 332.9 million full-time jobs and 27.9 million part-time jobs. Well, that's great. Until you look back 1 year and find that in February of 2023, the U.S. had 133 million jobs. So less than the total jobs today, the full-time jobs. Less full-time jobs today than a year ago. That's crazy. That's crazy. All the job growth since then has been in part-time jobs, which have increased by 921,000 since February of 2023. Crazy, man. Cumulative change in full-time, part-time. Okay, we'll skip that one. Here is a summary of the labor composition in the past year. All the new jobs have been part-time jobs. I mean, look at this chart, guys. Full-time here in red, part-time in green. That's bad news. That's bad news. So the unemployment rate, like on the lead in here to this story, the unemployment rate is not what it seems in the United States. And if we tick that box, are we in a similar position to those other major economies? We're a lot closer. I don't know if we're actually should count it as a recession yet, but we are closer. We are much closer to a recession, you know. So a lot of people are looking at jobs numbers and say, oh, the Fed is not going to react because we're not going into recession at 3% unemployment. But look at these numbers. It's not healthy. But wait, there's even more. Because now that the primary season is over and we enter the heart of the election season, the political talking points will be thrown around left and right, especially in the context on the immigration crisis. So let's just kind of skip through some of this verbiage and look at these charts. So here's a native-born workers monthly change crashing. They call this the lowest on record other than COVID, but GFC over here, if I zoom out, we can see the bottom axis. The GFC had some lower prints than here, but that is not very good company to have. And this is native-born workers monthly change. Pretty significant there. Foreign-born workers, though, let's take a look at this. Wow, record 1.2 million in foreign-born. And this doesn't break out if they're illegal or legal. So, said otherwise, not only has all job creation in the past 6 years has been exclusively for foreign-born workers, but there has been zero job creation for native-born workers since June of 2018. Silent depression. Remember what Emil Kalinowski said? This is a silent depression. Change in employment, you can see foreign-born, native-born, negative. This is a huge issue, especially at the time that illegal aliens are flooding over the border. Okay. Huge political scandal. All right. That's it. So that's what's in the jobs report this month. Let's go on to the next story. We're just going to skip right into some of the tweets that I have pulled up here. So this is a tweet that I saw. Thomas Puyo, whatever. And I thought this was good. He said, Egyptian pyramids are not where they're supposed to be. Why? Well, that's kind of a weird question. Why is Cairo the biggest African city where it is today? Alexandria. Why do over 100 million Egyptians live so densely clustered? These questions all have the same answer. Look. All right, let's go through some of these. So we'll stop it right here. Population density. Obviously, you see the Nile and the Nile Delta. Okay, Cairo is right here at the base of the fan where it goes up, and the pyramids are at Cairo. All right, so yeah, that's the brightest. But look at it. You can see kind of the outline of the coast and maybe some like little lakes here in the middle. But 99% of this country is empty. Empty. All right, let's go on to the next one. All right, now, obviously, look, it's desert. And that makes sense, right? People live where the river is. People invest where the river is. This isn't just why is the city here. I mean, that's a good lead into this. It's a big part of it. But the geography of the place matters, right? Geography matters. Very much so. It matters so much. Look at this. It dictates 99% of where people live. In Egypt, at least. It's crazy. Let's go on to the next one. Topography, Nile, some mountains. I guess this is where those other kind of lights were at this little depression here. Some of these depressions probably cooler and might get some condensation or some, probably not much rain, but able to live there. But yeah, so they live in this area. They don't live on tops of the ridges, on tops of the mountains. You know, they live in the fertile river valley. All right. This is more topography. Temperatures, hotter down south. I didn't realize this. I didn't realize it was that big. That was that big of a difference. Interesting. Or is that cooler because the elevation is higher? You know, because this is higher elevation. So I'm not sure about this one, but that's the least important one of the bunch. And we get back to this. So what am I bringing this up? Because, you know, a lot of people say, and it just so happens that Egypt happens to be in Africa, but a lot of people say that Africa is the next frontier. Well, there's a reason why Africa is poor, or relatively poor relative to other places. And it's the same reason why nobody lives out here in Egypt. Because of geography. The biggest part of it is geography. There's no navigable rivers. There's no bays. I mean, there's no natural ports really to speak of. I think Durban is the best port other than Alexandria in the whole continent. And it's not very good. They have very limited river systems. They have high escarpments right off the coast. They have a lot of places where they can't even get boats within like a mile or two of the coast, and they have to send small pontoon boats out to get the goods off of the big container ships and bring it into land from the ocean, because they don't even have the ability to get those container ships up to next to the land. So it is the geography that has kept Africa poor, and it will probably continue in the future. It is not the promised land that everyone thinks, oh, we got to compete over who's going to be getting into Africa. We don't need to compete over that. But this can be taken into all sorts of other aspects about, you know, why people say the U.S. hegemony is over when it's not, because it has the best geography on the planet, and yada, yada, yada. So I wanted to just kind of hone in on that, touch on that. Geomacro. Next one here. This is from President Biden earlier, and this is not a political show. I don't vote because I want to be neutral party to talk about this stuff, but this is what he says. I propose a minimum tax of 25% for billionaires, just 25%. That would raise $500 billion over the next 10 years. Imagine what that could do for America. Okay, so this is obviously lies, but it's predicated even on a false idea. So billionaires don't have like $1 billion sitting in a bank account. So how do you tax 25%? What are you going to be taxing? Are you going to be taxing their income? Because that's pretty much what you do now. I mean, billionaires probably are at the highest possible tax bracket. I don't know, 50, 60% of income tax. How are you going to tax a billionaire? Are you going to seize his property? Are you going to force liquidation? Are you going to tax unrealized gains on things? How exactly are you going to do this? Of course, I know it's a lie, but this whole idea is just not, it's based on complete ignorance. Okay, next tweet is kind of a random Friday, guys. Now, this one, taking it back to Bitcoin here, and saw this Guardy Guart. Don't never seen anything from this person before. Great name. But they said, just saw Dune 2. You know what's noticeably absent in all of these movies that depict the future or worlds with advanced technologies? Blockchains. So why is that? Why would that be? Let me see what they say here. Okay. Because they're so ubiquitous that no one thinks about them anymore? No. Mandalorian features a blockchain thing to track who are the authentic Mandalorians. Oh, I might have seen that, but I don't remember that. That's interesting. Okay. But the main reason is because of what, guys? My listeners should know this. Latency. You can't use Bitcoin on Mars. I mean, the only way you could use Bitcoin on Mars is to let me take that back. You can use Bitcoin on Mars, but it wouldn't be like it is on Earth, because the order of transactions and stuff. Like, what's the latency? You wouldn't be able to stay in consensus. You would always be behind. You could be a receive only node, maybe on Mars, but you couldn't really make any transactions. You would have to have a side chain that's for Mars, and then it settles to Earth once a day or something like that. But latency is a big issue. All right. Now just think about things that are light years away. You would never be able to use it. I mean, imagine trying to settle a side chain only like once every 20 years. It's kind of ridiculous. So that there's no reason to use a long, big, monolithic blockchain like Bitcoin. So Bitcoin kind of is earthbound. I mean, probably on the moon you might be able to use it, but and in orbit, but not even as close as Mars. Really, it would be pretty unusable. Blockchains for other things. Okay, why wouldn't you use blockchains for other things? Because blockchains are inefficient. So new people that find this show and watching the show later, blockchains are inefficient. You're told by scammers that want you to invest in their product, to buy their token, that blockchains are somehow efficient, and they're going to unlock some new efficiency or new productivity or something like that. That is incorrect. Blockchains are inefficient. So what you have to do with the blockchain is you have to have a copy of the blockchain on every node. All right. Then when you update the node, you have to find a way to keep consensus, how everyone updates their copy of the blockchain the same. So it has to be minimalistic because it's going to be reproduced everywhere. It can't be on like IoT things, like small little computers. You can't. I don't know how big the Bitcoin blockchain is right now, but it is extremely minimalistic, the Bitcoin blockchain, compared to other projects that have tried things. And it is getting gigantic into multiple terabytes of data, I think. So yeah, and that's a minimalistic chain. And you have to reproduce that on every node. So it's inefficient. Not only is the storage mechanism inefficient, the replication inefficient, but then the consensus, maintaining the consensus of all the different copies is inefficient. That is why a centralized model wins. A centralized model wins. The only time it doesn't is when the application is useful enough that it can overcome all of the drawbacks. And there's only one application that I know of that has, at least up to this point, been able to support decentralization, and that's money. At least on like a more global scale. Of course, you can have small little decentralized things. But money is the main application for this. I think identity, maybe in the future, people have been listening to my stuff for a long time. That's kind of a gray area for me, having some sort of identity on a blockchain. But no, money is the only application that is useful enough to be worth the inefficiency of blockchains. That's why you don't see them in the future. Because a money blockchain is, would only be as good as the planet you're on. It's not going to be an intergalactic blockchain. And so, yeah, that's that. Do I have any more? Nope, that was my last one. So I'm going to go back to the website, and then I'm going to take a look at any comments you guys have today. Dex Invictus back with us. Oh, yeah, God, I was going to look at all-time high. So let's go check it out. Here's the price chart. What are these lines? These lines are the previous all-time high on this side, and then this new all-time high over here, and then this all-time high. We're going to break it a few times here. I can just take these off. But actually, the one I was watching, and I talked about on the Proton yesterday, is this close of this daily candle on March 4th. That would be the highest close. And so that would also be the main resistance of this pattern, of this formation. And right now we're still above it by just a slight amount, but we still have an hour to go on the day. So we'll see where we close that. This did reach 70,184 on Bitstamp. So that is a monumental achievement of 70,000. But what am I thinking? So, I was talking about we need time to cool off. On the daily, we have cooled off enough to go up higher, not enough to go way higher. We could go 75,000 or something like that, but we're not going to make a God candle to 80,000 right here because we're still too hot on the daily. But let's go to the weekly. And man alive, it is not coming down at all. Obviously, it's a big week still here. And let me take this EMA off. And it's at 88. It just obviously keeps going up if we have a positive candle. It's kind of troublesome. It's kind of worrisome to me a little bit because this implies a bigger crash in the future. Of course, I won't be selling, and this isn't the end of the bull market. So don't think of it like it's truly worrisome or anything, but it means there's a bigger crash coming. More anxiety in the future. All right, let's see what's going on here. Yes, Dex says still seems to be on track for a downturn later this year. Yes, and what I'm talking about near term is not like a big downturn or anything. We could even just, like if we go back here, like this zone from October to November of last year, we consolidated going slightly higher, and we can consolidate going sideways and reset all of those numbers. So I'm not calling necessarily for a dip. I'm calling for a consolidation, a reset in some of the indicators here. And I think that makes sense. I mean, even here now, this is a bearish divergence on the daily for sure. And those aren't always extremely powerful. So, I mean, we can just keep tracking up kind of at this angle, but I don't see big moves either direction right now for the time being. Okay, let's take a look at some other macro stuff. Gold hit all-time high. Woohoo! I still own gold. I don't know why I never sold it, but I still do own gold. 2,178. I mean, I guess I feel good for the gold bugs. Finally, they get some action. Kind of feel sorry for those people that didn't listen. But what has this gone up? So let's see. Let's just go to a monthly chart and see what the change is here on this. 6.6% on the monthly. Now let's go to Bitcoin monthly. And so far in April, it's a smaller candle, but it's 11%, 11.7%. So even with a smaller candle than last month, which was a 43% in 1 month compared to gold. So yeah, Bitcoin is getting a lot of gold's bid. I think that will continue. I saw something with American Hodl, and he was like saying, "Oh, we're going to decapitate gold." I don't think we're going to do that necessarily this cycle, but gold is going away. It will always be around, just like altcoins, shitcoins will always be around. But sorry about that, my kids are making some noise. But yeah, let's take a look at the dollar. The dollar has been down recently, and this kind of took me by surprise. I didn't think it was going to go down this much, but we're coming into some support in this area. So we'll see what happens to the dollar. It did act as support here. Going to close above that for today. How about oil? Oil down on the day, 2% down on the day, down to 77. It doesn't match what I'm seeing at the gas pumps. The gas is going higher. I think I saw 330, 339 or something near me today. So that is significantly higher than just a couple weeks ago. And the S&P 500. This was up huge early, gapped higher, I think. What was that? Yeah, that was the futures, gapped higher, and is going to be closing red on the day, but still on my path. I have this line drawn for what I'm thinking. So like Dex said, on track for a downturn later this year. We're still going on my S&P 500 track. We'll see how long we last on that. Okay, so that was that. Let me see what else. What up, Ansel? What up, Joan? Didn't consider block propagation time. Yeah, I mean, you couldn't keep consensus very far. So you wouldn't be able to order blocks properly. You'd have to be receive only and just settle, like I said, on a side chain. Now that's possible. Who do you think is suppressing the price at this point? I don't think anybody is suppressing the price right now. It's pretty high and it's gone up very quickly. Like I just showed in February, it went up 43% and it's already up 11% this month, and it's only 8 days into the month. So I don't think that there's any suppression going on. These are natural cycles, natural market emotions. And when we have this extremely overheated weekly chart, there's going to be people selling. Like I was looking at the mempool today, writing for Bitcoin Magazine Pro. I did an image of the mempool, and let's just go to mempool.space. And if we go in here to, let's go to 1 month. Now, it was going down. Okay, it was chewing through, right? And then all of a sudden, February 25th, it starts going up. Then we get a little spike right here where there's a lot of urgent transactions. That's what I'm calling them. So when the rainbow goes up really quick, and can I zoom into that any better? Let's go to the week. Okay, maybe this is a little more clear. There's like a rainbow here. So when the rainbow goes, that means there's a lot of urgent transactions. Well, what day is this? March 4th. And what is the day of this daily high close? March 4th. Oh, let me share that tab. March 4th is the main day, the top that we're watching right now. So that means when March 4th was happening, a lot of urgent transactions were happening. What do you think they were doing? As we're approaching an all-time high, past an all-time high, people were getting out. I don't know why. I think it's ridiculous. There was a lot of people longing the all-time high as well, but they were probably prepared for that, waiting for that trade. These guys woke up, holy crap, it's going to hit all-time high. I'm going to sell. And a lot of Bitcoins went to the exchanges and were unloaded there. Also, a lot of these liquidations, that is putting money back in, putting Bitcoins back into the liquidity of the market. So I don't think that people are suppressing price. I think it just takes a while to suck up some of this. Plus, like when we see these big days and we see the big inflows for the ETFs, we don't know what else they're buying. Like they could have bought 10% more on some of these days just because they knew it was going up, and then they could flip that. The authorized participants could flip that for a profit to the ETFs the next day. So on the first day, you think, okay, we're going to have a few days here of big inflows. I'm going to buy 10% extra today. So you buy 10% extra, and then you flip it up here. So you have, it's not perfect, but I don't think there's any manipulation going on. I think it's just natural selling. And like I said, we've gone up 11% in 8 days. That's a lot. Okay. A lot of people are backing up the truck. Yes, a lot of people are. But so John says, is it like just a psychological point, or is someone just trying to back up the truck? It's psychological with the all-time high, but I mean, there are people backing up the truck. There are a lot of people got in. I mean, how many Bitcoins have gone into the ETF? It's just a matter of now the next time, the next wave is going to meet an even more restricted supply. I even saw that miners are sending half as many coins to exchanges right now. So, there is supply constraints building, and it's that next big push, I think, that's going to really pop. We on the next big push, like let's say we do some consolidation and we're getting out here into the end of the month and lots of things are looking reset and looking nice. I mean, I think we could blow right through 80 in a week, blow right through 80, go to 90. And then by that time we're talking 100K, and holy cow, the FOMO really kicks in. So, all right, let me see this. It's close. It's going to close below this, guys. It's right there on the knob. So we'll see where it closes. All right, I'm going to go to Telegram and see if you guys have anything added. Facey McFace, when did I switch to predicting a U.S. recession? I still had my odds. Like, I think it was, I don't know, November, December. I put out some odds for 2024 recession, and I think that then I updated them maybe in end of January or something. But the odds are for a recession. It's just a matter of how deep it's going to be. There are some weird things about. I think it could be a very deep but brief recession, which is for the reason because interest rates are very high, mortgage rates are very high, and when we go into recession, they're going to come down very, very quickly, and a lot of pent-up demand in the real estate market is going to flood out. It's going to flood out. They're going to refinance. They're going to sell or buy the home that they've been waiting to buy for the last year or two. So there's all this pent-up demand, and that is money printing. That's bank loans. That's money printing. So we have this huge pent-up demand, probably $1 trillion or more, of just people waiting to refinance and buy a house or move. And that's going to hit the market as we're going into this recession, or at least start hitting. So I think we could have a deep recession, but that $1 trillion influx from the housing market will bring us out of recession pretty quick. Because think about refinancing. What do people do with refinance stuff? With refinance money, they spend it. I mean, they're refinancing for a reason. And so a lot of that is, I mean, imagine buying a house at 7% or 8% for a 30-year. And then you have a chance to refinance at 3 and cut your payment by 40%. You're going to do it. So there's going to be a ton of refinancing going on, and it's going to push out a lot of money into the economy. And I think it will make any recession this year shorter. Okay. China seems effed. Any comment? Yeah, I have lots of comments on China. I had an article that came out from the Marty Bent's outfit. It's about China's collapse. I haven't read it yet. Maybe I'll share it here in Telegram afterwards. But yeah, China, everyone's starting to realize that China is really, really screwed. Okay, let me check one more time for comments. Okay, at what price? John asks, at what price are governments going to panic? I don't think they're going to panic. I mean, the reason why they panic is because Bitcoin is seen as a rival, but it's not. Do you think Millet thinks Bitcoin's a rival? No. So these people, they can easily adopt Bitcoin if they want to. I mean, not easily, but technically they could easily adopt Bitcoin if they wanted to. So I don't think there's going to be like any panic. I think the panic we're going to see is from the election, because there is going to be some major changes. I saw some stat about, like, in the world, there's more people voting this year in the world from all the elections aligning in 2024. There's more people voting this year than like ever. So 68 major countries are having major elections. I mean, it's ridiculous how everything's aligning in 2024. And a lot of that is going to be a populist revival, populist uprising, including the United States, including Argentina, like we just saw. El Salvador just voted, so like, I don't think governments are going to panic about Bitcoin. They're probably the ones that are getting voted out are going to be adopting Bitcoin because they're out on their luck and they want to buy some sound money that's going to appreciate if they lose their grift. You know what I'm saying? But anyway, maybe I'm too rosy of a picture on that. Maybe they will fight Bitcoin. A certain segment will, but most governments will not ever fight Bitcoin. So, all right, that's going to do it for me today, guys. One more time, check out bitcoinandmarkets.com. Thank you so much for joining me. Like, comment, subscribe if you're watching this later. Helps people find this stuff. And also share. Please share with your social media. I appreciate all that. Check out bitcoinmarkets.com. Check out bmpro.com. Come hang out on Telegram if you guys aren't on it and you're watching this. T.me/Bitcoin and markets. All right, guys. See you on the next one. Bye.